So today is starting to seem like a pretty red day, especially for the semiconductor market. We can see Nvidia is down roughly 5.9%, AMD is down over 7%, Lam Research is down over 7%, Supermicro is down over 5%, and TSMC is down over 7%. So in today's episode, what I want to do is kind of share my overall thoughts of what's happening here and maybe say where I wouldn't mind buying some of these stocks. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So first, I want to start off with maybe buying price point. I think Nvidia, if you've been watching my previous episodes, if it gets to the low 1 teens, it seems pretty attractive if analysts are correct, and if you believe analysts will be correct about how strong the Grace Blackwell product is going to be. We keep hearing reports that the GB200, their NVL72 and NVL36 are going to do some crazy numbers next year. Now, if those numbers are true, I believe Nvidia in the low teens would be at a very attractive point, either purchasing shares or options if you know how to do that as well. Now, AMD, I believe AMD right now in the low 160s or in the 150s specifically. If we get to the low 150s, I think AMD would be very attractive. The big kind of semiconductor equipment companies, Lam Research, ASML, I tend to stay away from them, Taiwan Semiconductor, TSMC, as I believe most of them will kind of match a semiconductor index ETF. But if you're definitely looking to get into, definitely take a closer look at these giants as they have dropped a nice amount, especially ASML. As I am recording, the stock is down roughly 10.9%. So why is all of this happening? And Supermicro, I think Supermicro, if we get to the 700s, that would definitely be a somewhat attractive if you want to get into the hardware AI server space. As if you believe Nvidia can benefit, Supermicro can definitely benefit. And I believe at 700s, a lot of the risk has been eliminated. So just sharing my overall thoughts on price. Now, let's take a closer look at what's happening. But before we go there, I did mention a lot of semiconductor companies today. And if you're not familiar with a lot of them, I have the perfect answer for you. I've created this investor semiconductor handbook with over 50 plus semiconductor public companies, kind of telling you what they do and answering 15 Q&A sessions where you can learn more about that company. The great thing is I'm going to be adding more companies throughout the weeks. And if you purchase the book now, you will also get that updated version. So check out my ebook at moresemiinvesting.com. So first, we did get some major chip stock slump after Biden reportedly considers more restrictions on sales to China. So for those that are not familiar, right now, certain chip companies that make the most advanced chips can't send their top of their line product to China, which has affected revenues, right? Nvidia's data center revenue in China has almost gone to zero after being about 22-24% historically. Luckily for Nvidia, right, we have the huge demand of AI that even losing that Chinese market in the short term isn't necessarily the worst case, but in the future that might continue to be a headwind. Now, the ones that definitely could get some implemented hit from this, I think is going to be the semiconductor manufacturing equipment companies. Those are the ones that might find some loopholes here and there to be able to send equipment over to China. I think these regulations are probably going to be meant more for the equipment companies or even the clouding companies that might be allowing some Chinese customers to use their clouding server solutions that are also allowing them to use some of the top of the line AI chips. But obviously this kind of geopolitical tension has created a lot of fear for semiconductor investors. And let me just say, if you are an old school semiconductor investor, these types of regulations and these types of fears and risk are not new. If you've been in the semiconductor market, this has always been a topic of discussion, that some of the biggest issues and some of the biggest risks are actual geopolitical risk for the semiconductor market. Another thing that we did say is DJT said Taiwan should pay the US for defense in an interview with Bloomberg Business Week published Tuesday. And here we can see a presidential candidate really kind of put even more pressure on Taiwan, which obviously can put a lot more pressure on a company like TSMC. So we're seeing a lot of, again, geopolitical risk here in from the United States to the chip industry, mainly in forms of both the Chinese market and the TSM market, the Taiwan market, where obviously a lot of chips are being built. So those two things right now, I believe, is what's creating a lot and a lot of fear for semiconductor investors. I personally believe in the long term of things, this is just going to be noise. Now let's talk about ASML, as the company just reported earnings and the stock is down over 11% today. Now, with ASML, we did have a great earnings. It seems that the company did beat on forms of revenue for this quarter. Unfortunately, bookings, from what we're seeing based on reports, bookings did not meet analyst expectations, and this could be one of the fears that's causing ASML stock to drop a little bit more than the others, right? ASML can definitely be hit with the added regulations on chips because their equipment is used to make the top of the line AI chips. So ASML is definitely feeling some pain, but also by missing the outlook, it's creating even more pain to cause the stock to drop over 10% today. So ASML, if we take a closer look, they did have net sales of roughly 6.2 billion euros, where analysts were expecting around 6 billion in that market. Net profit was 1.58 billion euros versus 1.43 expected. So earnings were strong. One of the main reasons is outlook was a little bit weaker than expected. Now, if we take a closer look at what ASML shared, ASML's quarterly net bookings were 5.6 billion, which 2.5 billion is from EUV. So this is very important in my opinion. For those not familiar, net bookings are future sales that they have captured. And for it to be 5.6 billion, it is up versus a year ago, where even a quarter ago, right? A quarter ago was 3.6 billion. So they're selling more equipment now. What I found surprising was that EUV was actually fairly low at 2.5 billion. So less than 50% of the future sales are going to advanced solutions or advanced AI chip equipments like their high EUV machines. This right now tells me that the market probably needs more in the mature nodes than in that. And also there's only a selected amount of companies that really focus in the high advanced chips. But I would have expected this number to be a little bit higher, for it to be more focused on DUV instead. That kind of gives me a little bit worried that maybe a lot of these customers are the Chinese customers right now, which could obviously be kind of a headwind in the future. Overall, they mentioned that their outlook for the full year has not changed. They expect revenue similar to last year. Maybe some investors were also hoping that this AI craze was going to push more revenue, where this company was able to grow year over year. But ASML is saying that, hey, look, that's not going to be the case. They also do expect the second half of the year to be significantly higher than the first half. One of the things that they are mentioning is they expect logic revenue to be slightly lower in 2024, and where they're really seeing a huge growth right now is memory, as a lot of these memory companies are seeing huge growth, especially with DRAM technology nodes used for things like high bandwidth memory and DDR5. So seeing this, I actually am super excited for semiconductor equipment companies that have a lot of memory customers, because those memory customers are probably buying a lot of equipment right now, especially for things like high bandwidth memory and for things like DDR5. So some companies that could come in mind are like maybe BESI, Lam Research, and other players that might provide metrology inspection for the memory market, as that is growing so largely that they are seeing a huge growth in equipment sales there. So memory semiconductor equipment companies should definitely grab your attention, and maybe I might use my ebook to find some of those companies. So I hope you guys are enjoying the episode. I think that's all I have for you. Like I mentioned, a very quick overview. I believe the sell-off could continue for the semiconductor space, but in the long term, I think this is just going to be noise. So I have no intentions of selling. Nvidia, if it gets in the low teens, definitely very attractive for me. AMD in the 150s, very attractive for me. Super Micro in the 700s, if we get there, very attractive for me, right? Obviously, we're not seeing those levels right now, but if this red trend continues, who knows? We might see them, and I'm just going to keep those numbers out there just in case we get it. So take care, have a good day, and see you all next time.